Welcome everybody back to Liquid Lunch, powered by CryptoQuant. And we're excited to be here again this week. We've got quite the panel today. And so, yeah, the last couple of weeks have been a little wild. I think our last guest, James, was actually spot on with the approval of the ETF. And so now looks like we're getting a little bit of a rug pull, but the big guys are here. The big guys are here. And so if you guys aren't familiar with CryptoQuant, I want you guys to all go check out CryptoQuant.com. You can set up an account there, but really we're the leader in on-chain data analytics and your go-to solution for institutional, data analytics for on-chain data. And so our platform provides that analytics for you. And we've got some experts today that are going to help go through some of the data. And so I love to see everybody in their Hawaiian shirts. Good morning, guys. Good morning, Julio, Ben, and Tone. How are you guys this morning?
Excellent. Glad to be on this show. This looks great.
Yeah, good to see you, Tone. I'm glad you're in the spirit of the Hawaiian shirts and you've got your beverage. What are you drinking this morning?
Man, it's a little too early for alcoholic drink, but I decided to put some citrus in my nice fresh water. I'm down here in Panama, so it's I'm kind of in the middle of the rainforest.
It looks very refreshing, I gotta say. Julio, any beverage of choice this morning?
Oh, just juice.
All right, well, let's get into it. We've got our weekly reports that we put out with our on-chain data. And so Julio is going to present some of this data to you guys and figure out what's been going on with Bitcoin the last couple of weeks here, Julio.
Yeah, thank you. Yeah, we put these weekly reports and where we talked about what we're seeing on the market, what we're seeing on-chain. And of course, in the last few weeks, we've been talking a lot about the spot Bitcoin ETF approvals, the expectations, and what we were expecting after the approval for prices, right? And so for the last few weeks, we've been saying that, and in these reports, that this was still the news event, that we expected prices to retrace, to enter into a correction. Mostly because how much profit, unrealized profits were in the market, coming to the ETF approval. Prices had increased a lot. And so we were seeing, on-chain, how the Bitcoin holders had a lot of profits built up. And so we were expecting that some selling to realize those profits from Bitcoin holders. And so that's what we were been talking the last few weeks, and this is what you see in the screen is the latest report that we published yesterday. And of course, here we can see the correction in prices after the approval, 15%, as much as 15% at some point, from 48, almost 49,000 to 41.5, and right now we are around 42. And so, yeah, we saw that, how it was approved, it started trading, and as we were expecting, seeing some correction on prices. Besides that, I mean, I think the launch and the trading volume was, let's say, really successful, right? We saw record high trading volumes for some of these funds and the funds that already were trading. And so we had, really record volumes on the launch and the first days of trading. We also saw, with tracking also Coinbase OTC transfer volumes. And so we also saw like a lot of transfer volumes to Coinbase OTC. This is something that we track on chain for Bitcoin and for this type of entities. So yeah, in terms of trading volume, in terms of transfers, there was a lot of activity on the network in the day of the launch of the ETFs. And talking about the prices of these funds, we've seen that mostly because GBTC, right, that had been trading at a discount for a long time, since 2021. As the ETF approval was coming, then that discount narrowed. And now that GBTC is trading as an ETF, we saw that price premium discount almost at zero right now, and some of the other Bitcoin ETFs are trading at a small premium to Bitcoin spot ETFs. So that's something that we saw right here in terms of prices of those funds. And for U.S. demand for Bitcoin, we track this metric, which is the Coinbase premium. So we compare how spot Bitcoin is trading in Coinbase to other exchanges. When this is green, it's indicating that there's more like demand in the U.S. compared to outside the U.S., right? And you can see that going into the approval and as prices increased, there was a lot of demand in the U.S. for that. And after the approval, now we've seen that demand weakened a little bit. And so right now, prices in Coinbase are lower than in other exchanges. So it's an indication of people demand weakening a little bit, investors, and also because they're taking a little bit of the profits, right? So that's all the things that we saw after the approval, demand a little bit weakening in the US. In terms of on-chain activity, you see here, this is the approval and then the launch, right? And what happened after? A lot of on-chain activity for traders, short-term holders, right? Which are mostly people trading. And so you see that spikes, high activity on the network after the approval, a lot of selling. This is the one interpretation that we can say from this chart. And in terms of the different market participants, we like to track the whales, right? What are whales doing with their coins? And you can see here how it also spiked. This is the approval right here, then the correction, and then there's a lot of whales or large holders of Bitcoin also selling or spending their coins. So that's a lot of activity from whales, and so I think that they were also taking profits, right? After the launch of the ETFs materialize. And this is a really good chart. Actually, this is the metric that I was following closer before the approval, like the weeks before the approval, because it's tracking, like the purple area here is tracking how much unrealized profits traders and short-term investors have, right? And so you can see that since November, December, as prices increased about 40, these unrealized profits hit like really extreme high levels, right? Above this red line, it's around about 40% of unrealized profit margin. So there were traders sitting in a lot of unrealized profits, right? And so I started to, in December, to talk about this. Like there's a lot of paper profits in the market, and so I think that I was writing about this. I think that once the approval comes, these guys that sit in a lot of unrealized profit, they're gonna sell to realize those profits, right? That was the thesis that I had, and so I was really following closely this metric. And now, I mean, we got to extreme levels of unrealized profits, and now, of course, with the price corrections, we are now seeing like a less unrealized profit as traders are taking profits, right? And so a little bit of unease on the selling pressure because they are realizing profits. But still, I mean, typically we see bottoms for the price, talking about this metric, when it goes like maybe 10% of losses for traders right here. So I think we need to see a little bit more of a selling based on this metric. So, but yeah, it's really important. This is the one that I was tracking more closely coming up to the ETF approval. And then we also saw this is an interesting metric tracking the flows of Bitcoin between spot and derivative exchanges. When this is increasing, so more Bitcoin is flowing from spot to derivative exchanges, interpretation is people sending their coins to derivative exchanges where they can get more more leverage or trade with more risk, right? And so when this is trending up, like it was since late 2022, we can expect like an upward trend in prices. But interesting thing now is that after that, even a little bit before that, the ETF approval, it turned into a downward trend. So I think the interpretation is the traders or investors now taking a more let's say risk off approach after all the increase in prices that we saw for last year. So yeah, that's something that also we need to track, like, okay, is this going to continue, or after prices correct a little bit more, maybe it will come again, people turning again into a risk on mode. So yeah, that was basically what we wrote this week. The sell the news event and the on-chain behavior of Bitcoin holders. And so we think that now the selling pressure maybe is a little bit after mostly because of less unrealized profits, but still we need to wait a little bit more, I guess.
Okay, awesome. No, that's a great report. And for those that don't have access to these reports, if you guys sign up for CryptoQuant.com, get a free account. Now, this is available to our premium and professional clients as part of our market research. And so every week we do put these out. So go ahead and sign up for a free account if you'd like to get access to some of these charts. But really, I'm excited today because we've got the man, the myth, the legend, Tone Vays with us today. What is going on, Tone? How are you, my brother?
Hey guys, thanks for having me on the webinar. That was a nice report, very interesting. That last chart is a little scary looking. That's concerning.
Yes.
That the coins have started migrating from the derivative exchanges off to the spot exchanges. Definitely have to keep an eye on that. It's good that some of the selling pressure has gone off. I was also one of the big proponents of sell the news event, regardless of what that news event was. I am keeping a very close eye on these ETFs. I have my own spreadsheet going as to how much Bitcoin these ETFs are holding to back the ETF. And today on my to-do list is actually, I'm going to break it down by day, the cumulative number, because while everybody is adding additional Bitcoin to their ETFs with additional shares, the opposite is happening in GBTC. GBTC is selling Bitcoin like there's no tomorrow. They just sold like 20,000 Bitcoin yesterday. And I need to keep track of that. And honestly, I think the selling by GBTC is greater than the buying of all the other ETFs combined. And that's helping to drive the price of Bitcoin lower. I'm going to get to the bottom of that today with the numbers by going through it and how it's been happening for since last week. That's pretty much on my radar here. I mean, the TA charts do not look good. The TA charts are still pointing to more downside, maybe as low as 36K. That's my kind of realistic low. I would like for us to reverse right now. I would love to see, the 41.5 hold and for us to go higher. Some of your charts are potentially indicating that that can happen, but none of the charts you guys showed seem to show a reversal at all. It's showing signs that there might be a potential reversal like sometime next week. So that's a plus, but I didn't see any of those charts actually indicating a reversal yet. So same thing with the TA charts. They're not indicating a reversal yet. We can pray and hope that the reversal happens. And the moment the price of Bitcoin gets over 44,000, I become a raging bull. I think at that point, the GBTC is going to stabilize. The selling from GBTC is going to stop. It's still going to hold a substantial amount of Bitcoin. I would personally like to see GBTC's holding of Bitcoin. They finally dropped below 600,000 yesterday. I would love to see that come down to like the 300,000 area, while the other ETFs cumulatively are up to about 200,000-300,000. But when you add that up, that's still less than 630,000 GBTC was holding, right? Where before the ETFs were approved. So once that ratio stabilizes, I think from that point forward, we can look forward to the halving and that hype driving the price higher.
What do you think is the reason GBTC is dumping their coins at this point?
Oh, so the reason for that is, and I kind of contributed to this, is because once the spot ETFs came in, you now have other alternatives, right? So I personally, and I've talked about it on my channel, I exited 75% of my GBTC position. So I was massively long in GBTC in my tax-free retirement accounts because I was taking advantage of that ridiculous premium. That was a 50% discount about a little over a year ago. Now, I was holding GBTC even before that, but I wasn't going to sell with a negative discount because I knew that they had the Bitcoin. So I wasn't worried. I knew that discount was going to go back to zero. And the longer the ETF was going to get delayed, the higher the probability was that that discount was going to turn back into a premium. So that's what I was waiting for. And pretty much the day the ETF came in, that discount was gone. It was as close to zero as you can get. So because I expected a sell the news event, I exited GBTC the day before the ETF was announced, turned that into cash, but I still held 25% of my GBTC in my account. But once the ETFs were out there, I started converting my GBTC shares into, I converted mostly to IBIT, which is the BlackRock ETF, because that's the most liquid. BlackRock also has the most ETF experience. But, I may support Fidelity, I may support Valkyrie, so I may support other companies. But for now, I converted my ETF shares from GBTC to BlackRock, and other people did that as well. And now that the GBTC has turned into an ETF, when there is selling pressure on the shares, Grayscale, the company, will remove extra shares from circulation and therefore sell the Bitcoin that backs those shares. And as people exit, because remember, they can't have that discount anymore. The reason why you ended up with that discount to begin with is because there was too much selling pressure on GBTC shares, and they can't sell the underlying Bitcoin. So people are just holding underwater GBTC shares. But now that it's a proper spot ETF, they can take those shares off the market and sell the underlying Bitcoin, therefore maintaining that discount premium to within 1%. And that's how, as long as these ETFs are managed properly, and it's literally the job of the company to manage that ETF properly, that discount to premium ratio will remain within 1%, maybe even within 0.5%. You're not going to see these crazy discounts and premiums anymore. But in order to do that, you always have to buy additional Bitcoin on the market or sell additional Bitcoin on the market. But eventually, the market comes into equilibrium. And like, for example, in several months from now, maybe later this year, there'll come a time where neither, let's say, BlackRock, they're not buying any ETF on the market for an entire week because the buying and selling of the ETF itself is like so equal that like the natural buying and selling pressure from retail investors and some institutional investors like us, which is the retail side, we will keep it in equilibrium because there's so much arbitrage going on. Oh, this ETF is dropping, but that other ETF is holding steady. Let me short that ETF and buy this ETF. So there'll be so many bots out there trading this stuff that there's not going to be this massive need unless a bull market comes, right? Like after the halving, there's less Bitcoin in the market. Some big Elon Musk comes in and buys 100,000 Bitcoin, and suddenly the price of Bitcoin spikes. Everyone rushes to buy these ETFs, and these companies now need to rush and buy the underlying Bitcoin. And that spikes the price of Bitcoin even more, and it creates this FOMO cycle until there's nobody left to buy. No, everyone already bought. No one wants to buy at high prices, and then the prices crash. That's basically what happened on the launch of these ETFs. Everyone that was speculating to buy in preparation for the ETF bought before the ETF came. The ETF comes, no one is left to buy. Everyone's already holding it that wanted to buy it, and the prices have nowhere to go but down.
Hey, Tone,
Yeah.
and one question, just one question about what you were talking about. Now that the discount for GBTC is basically zero, and you did that like switching right out of GBTC. Is that something that I think Ark also did that, right? Because they announced it like they were exiting GBTC, but people thought that, oh, they dumping Bitcoin, but it's just like as that discount narrowed basically to zero, there's now no more like incentive to hold that, right? Because they already took advantage of all the discount from 50% to zero.
Right. Ark was a massive holder of GBTC. One of the reasons was probably they were taking advantage of that discount just like I was. And Ark had a way bigger position than I did. And why is Ark going to keep holding GBTC? They have their own ETF, right? Why are they going to pay a 1.5% annual fee for Grayscale to manage an ETF? They can just pay themselves that 0.25% or 0.3% fee. It's cheaper, and they're paying it to themselves by them holding their own ETF. So of course they're going to be selling GBTC, putting selling pressure, forcing Grayscale to sell that Bitcoin on the open market. Meanwhile, they're buying their own ETF, therefore creating buying pressure of Ark, another portion of Ark's company, buying additional Bitcoin in OTC markets to back the ETF. And it's a big battle. There is now 11 of these ETFs or 10 of these ETFs, and they're all fighting for liquidity. They're all fighting for how many shares they'll have on the open market, how many Bitcoin they'll have back in it, because that's how they make their money. These companies don't speculate on the price of Bitcoin. They don't care if it goes up or down. They certainly don't want it to go down, because if Bitcoin goes to zero, then they lose their product that makes them money, right? So they are slightly incentivized for these products to go up in value versus go down in value. The volatility doesn't matter to them either. They don't want to be out there, calling brokers all day long. Hey, today I got to buy a bunch of Bitcoin. Hey, tomorrow I got to sell a bunch of Bitcoin. They don't want to do that either. They want the most stability, but at the same time, they want their ETF to be more in demand than their competitors' ETFs, because that allows them to buy more Bitcoin in OTC markets, and the fee that they charge, that 0.25% to 0.5% annual fee, that they take that based on how much Bitcoin they are protecting for the ETF. So it's a big battle. Right now, BlackRock is clearly in the lead with Fidelity in second place. I will do a shout out to Fidelity. Unlike the other companies, Fidelity is self-custodying the Bitcoin. Now, Fidelity is still a regulated American institution. So if Order 66 or the FDRs 6102, right? I personally envision a 6102, only wouldn't be 61, it would be like 1,000 6102, because that's how many executive orders have shown up since that one. And I can certainly see a US president 8 to 9 years from now, like basically doing a copy and paste of that order and changing the word gold to Bitcoin and confiscating the Bitcoin from the financial institutions. So the more individuals continue to self-custody Bitcoin, the safer you would be. The government back in the 30s never went door to door. No one ever got arrested. They never actually forced gold out of people's hands, but everyone held their gold at the bank, so they never had to.
I have a quick question, actually, because you mentioned that Fidelity, you're bullish on Fidelity because they're self-custodying. So in terms of like the other ETFs or the ETFs in general, what, and when people are, deciding which ones to buy, what things are you looking at to see which ones may be superior in different ways?
So to me, it's expertise in managing an ETF. And BlackRock is the leader there with iShares. Van Eck has experience. Now a company like Valkyrie, they're new. Shout out to Leah Wald, friend of mine. They're new, but like they don't have this 20, 30-year track record on Wall Street of maintaining and managing ETFs. Depends on how good of people they hire, so they're a slight disadvantage. The other thing I look for is the management fee. Obviously, the lower the management, if you're going to hold this for a long time, I mean, look, 5 basis points doesn't matter when you're holding something for a few months. When you plan to hold something for 5 to 10 years, it matters. So especially if the difference is not 5 basis points, but say 100 basis points, like in the case of GBTC versus their new competitors. The other thing I look for is a daily volume of trades. So for example, this is why, before I get to the example, this is why these ETFs were priced between $10 and say $60. Because if you price it too low, you turn it into a penny stock. You price it too high, this is why stocks split, right? People don't want to buy 3 shares of something. It's really annoying. It costs them trading fees to hold 3 shares. People want to buy in 100, lot trades. So you want max liquidity. Max liquidity creates small bid-ask spreads. So when you look at GBTC, when you look at the BlackRock ETF, the difference between buying and selling, what that market maker makes, is usually a couple of pennies. When you get to some of these obscure ones, like the DeFi ETF, which is on the lowest of my list of 10, their spread is going to be huge. It's say it's a $20 price ETF, but because it's so illiquid and not a lot of people are trading it, that bid-ask spread could be 20 cents. You're buying 20 cents lower, and then let's say you bought it by accident or you clicked the buy button by accident. You're like, shit, I just made a mistake. I got to exit this right away. You just lost 20 cents on that trade. Meanwhile, if it was a BlackRock ETF, you only lost 1 cent or 2 cents, right? So to me, the daily trading volume matters a lot. So those are the biggest things I look at, those 3 factors. And at the moment, BlackRock is leading in all 3.
Hey, Tone, one question about fees. What do you think? Why do you think GBTC, they haven't lowered their fees as much as the other competitors? What's the strategy there, or are they gonna lower over time?
That's a great question. So they've already lowered it. That fee used to be 2%, and it was embarrassing that it was 2% for so long, but they were a monopoly. So they were able to milk it. Look, they were holding over 600,000 Bitcoin. 2% on 600,000 Bitcoin per year. That is, what, 12,000 Bitcoin that they get to keep for themselves. Now, in reality, they're selling it, but they can also keep it. That's pretty good money, right? Like, we all want to make 12,000 Bitcoin a year, and their only job is to maintain the ETF, like maintain the security, like don't get hacked like BitPay did back in 2014 or something during their commercials for the college football game. So that's their only job, is maintaining this ETF. And they dropped the fee already to 1.5%. But they're holding a lot of Bitcoin. They're just milking it. They're making ridiculous money every single day, right? And they know they're not going to compete with these other ETFs. That goes back to, they still have the liquidity. They still have some of the best liquidity, so their bid-ask spreads are small. But they kind of know they're not an ETF company. This is their first ever ETF. So they're doing what they can, but they know they're not going to compete with BlackRock. At this point, what I think is happening is they're like, look, people are going to sell our shares anyway for these other competitors. We might as well keep the high fee so we can still make a shit ton of money this year until everybody liquidates. And then maybe when the whole system evens out, when the guy that was going to sell anyway or sells, and the lazy people that don't care about that fee or don't know about that fee, once we stabilize on not selling, maybe we'll then lower the fee to drive in some new business. But they knew that at this point, no one is going to rush in on Thursday and Friday or today or tomorrow. No one is buying GBTC ETF, right? They're all buying, the latest and greatest and the hottest thing, like BlackRock, for example. The only reason for them to lower the fee to what their competitors have is to prevent the bleeding. And I think at this point, they made a conscious decision that they'd rather milk the 1.5 than to drop it and make almost nothing and retain their people.
So Grayscale obviously were, they were kind of to a certain extent the ones almost responsible for this slew of ETFs, right? Like they had that case with the SEC. The court said, that to the SEC that there's no reason to deny these ETFs. So we can kind of thank Grayscale in a way, but not necessarily to speculate here, but why do you think they were pushing for an ETF when, you and I both know that when these ETFs were passed, they would be, losing, they'd have to sell. Why do you think that they were pushing for it?
Man, that's another great question. Honestly, I think it was the lawsuits coming down the pipe, because a lot of people don't realize why they had such a massive discount and why they had such a massive premium. And that's because they weren't the proper ETF. And I think their legal issues were just piling up. David Bailey had that huge campaign to remove Grayscale as the custodian of that Bitcoin ETF, and he would have immediately lowered that fee to say something reasonable like 0.5% instead of 2%, because David Bailey and his company would have been happy, collecting instead of 12,000 Bitcoin a year, collecting like 3,000 or 4,000 Bitcoin a year. But they would have been very happy with that. And I think it was the pressure. It was like the overall pressure of they have this product, they're charging an enormous fee, and they just got a bad rap. They had that Genesis situation where one parent company gave another parent company, gave a sub company money. I think they were just under so much stress that they needed to divert the attention to do something positive. Grayscale only really did two positive things in their entire company's existence, right? One, they kind of kicked off this ability for people to own Bitcoin in this type of an account, and then got it past the SEC to allow people to trade it. Yes, it wasn't a proper ETF, but it had 95% similarity to a proper ETF. And then, and because they didn't have any competition, they ended up in this massive premium and massive discount. I don't think it was their fault, but that's all they had. But they did so much bad for the crypto space as well, or the Bitcoin space as well. They created all of these scammy products. They even had to remove some of them, like Ripple being one of them and one other. They have some of the scammiest coins that they're probably going to try to push for ETFs now. They were bad actors for Bitcoin's decentralization, and they were taking advantage of a lot of people. So they've done a lot of bad. And then I think the way to divert this attention, they were more saving themselves than really looking out for others. And if others were going to have an ETF, they want an ETF as well. And the problem that they're also running into is the fact that the SEC probably doesn't like them a lot. And they did not allow Grayscale or GBTC to use their Bitcoin they're already holding in their trust product to just move it to back the ETF. So any new shares that they have to create, they have to literally sell the Bitcoin that they have and rebuy them from another source, creating a taxable event. So the SEC was clearly not happy with Grayscale's push, and I guess they had decent lawyers to fight the SEC. They made the SEC look bad, and the SEC came back at them to give them a bit of a problem when or if there is a desire for people to rush into GBTC and they have to create more shares. But they're not creating more shares, right? They're actually exiting those shares. And that's probably another reason why they're keeping that management fee so high at 1.5%, is because they know no one's going to be rushing in to buy it. So they remove that 1.5% every day. Now, they don't take 1.5% every day. It's 1.5% divided by 365 days, whatever number that comes out to. That's the percentage that they remove from their stash of Bitcoin, and that stash is dropping by 10 to 15,000 Bitcoin every single day.
That's crazy, what type of power they had. And so I think it's good. I think you're right. It's good for decentralization, for Grayscale not to have as much Bitcoin. But, let's talk about, a lot of people may not know, Tone, but you come from the TradFi space, right? You traditionally were in this space and then have been now an OG in the Bitcoin world for a long time. And so this is the first time, right, Wall Street has had a purely finite asset that trades 24 hours a day. Now, many in the Bitcoin community are concerned that this is a way for them to control the price, for them to manipulate paper Bitcoin and to, hold down the price in essence or whatever. But what are your thoughts on, I guess, first of all, the whole craziness with the SEC, with the fake tweet and then the deleted tweet and then the approval, what's going on there? And then is Wall Street really is this really gonna help, you think, the traditional IRAs and people that want to get involved in Bitcoin because it's not real Bitcoin? Or what's kind of your thoughts on this whole ecosystem of Bitcoin being introduced into this ecosystem?
I think it's a good thing. I think the easier and the more professional products there are for a retail trader to access, the better. And I don't believe that this is a way for these institutions to control Bitcoin. There is lots of speculation of this in the gold space, that somehow these bankers are holding down the price of gold. They're not. They don't care. They love it when when gold goes up. All the gold bugs, come out of the woodworks, claiming they were right. Wall Street just sells you the gold. No one cares about gold. That's why gold hasn't gone up. Just no one cares. You can look at those videos where the guy is offering a gold coin versus like a chocolate bar right next to a gold shop, and most people will choose the chocolate bar. No one cares about gold. So I don't believe this is a way for these companies to control Bitcoin. Again, my greatest fear, as I mentioned, way too much Bitcoin being concentrated in the US. So maybe it's good diversification that Grayscale is lowering the amount of Bitcoin they control versus other companies. That means that, Barry Silbert can't run away to China with all the Bitcoin like Big Vern did with the Crypto Bitcoin. That can still happen with traditional institutions. So it's better that it's spread out, but most of it is still held in Coinbase custody. So on the greater scale of decentralization, not much is changing at all. I think this is probably a good thing. The only downside is people not self-custodying Bitcoin, and that is a little bit scary. So other than that, I don't see this as like they're going to control the price of Bitcoin. Now, back to the 24-hour aspect, Bitcoin does trade 24/7. And there are other instruments that trade 24/5. These are the futures markets and the currency markets. They're only closed on the weekend. They don't have much liquidity during off hours. And the challenge with these ETFs is if you're trading ETF and not actually trading Bitcoin, if something happens in the middle of the night, you don't have the opportunity to sell or buy. And honestly, I think in the next 5, 10 years, maybe 20 years, eventually the other markets are just going to have to go 24/5 or 24/7. Stocks can trade 24 hours a day, 5 days a week. It's going to be hard for traders. Like one of the reasons why the market is closed most of the days, because people have lives, right? And there's nothing you can do, and that's almost a good thing. It gives you a peace of mind. So we'll see what happens. But yes, these ETFs only trade 7 hours a day. It's going to be a little bit challenging if that is your only access to Bitcoin. But you can still manage it. And that's why I encourage more longer-term positions than day trade positions.
Do you think this opens the door for altcoin ETFs at this point, right? Is the SEC signaling that they're going to maybe do an Ethereum ETF, maybe a Solana ETF? How crazy do you think this is going to get?
This absolutely opens the door for altcoin ETFs. Now, the SEC, as far as I'm concerned, I think the vote was 3-2. And I know Gary Gensler did not want this Bitcoin ETF. I've been saying it for a long, long time. He didn't want this Bitcoin ETF. He doesn't want any crypto ETFs. So the vote was still close, even on the Bitcoin ETFs. I think they're gonna hold back the altcoin ETFs for as long as they can. Honestly, I think the lawsuits come. I think they're going to even hold off the Ethereum ETF until finally somebody files a lawsuit. Why is there a Bitcoin ETF but not an Ethereum ETF? And the delay that we saw in the Bitcoin ETF, the 1.5 years, is probably what they're going to try to do in the altcoin ETFs. The applications are going to flood them, and they're going to delay them as much as they can. They know all these other altcoins are unlicensed securities, but they can't prove it in a court of law. So the SEC is going to be in a bind until there is enough pressure on them to either win one of these cases and prove that something like Ethereum is still a security and it always has been, or they're going to be forced to approve it. Or, if they hold out long enough, Ethereum will just collapse on its own. That's kind of my hope, but we'll see where it all goes.
I'm curious to know, Tone, about, you're a trader, like what kind of trading strategies are you seeing on the horizon these days? Like, how does the introduction of these ETFs affect any type of trading strategies that you're working on? Curious to know your opinion there.
Yeah, look, I think overall this is going to be more bullish for Bitcoin than bearish as we are in a bull market. I think we all agree here that the bull market has started, and I think we all agree here that the bull market has not yet ended, with the halving just 3 to 4 months away. And Bitcoin really takes off after the halving. At least that's been its historical history. It could be different this time. It can. But I am sticking to the trend until it proves me otherwise. So while this is a short-term pullback, I don't think it's going to go lower than 36,000. It's possible it's not even going to go lower to 40. I see the rest of this month and next month as a buy the dip event. You can try to time this dip, and buy your lump sum. You can try to continue to dollar cost average if you're still earning a fiat salary. To me, this is turning now that we've fallen from 48,000, which was a very critical area of resistance on technical analysis. I had a Fibonacci line there. My MRI indicator was showing a top that week, and I was talking about it for a month prior to that. So right now, anything near 40 or below 40 to me is a good accumulation opportunity if you have a longer term time horizon, which most people should.
Going to ask about, the altcoin ETFs, because I think there's precedent with the XRP getting that is not a security, right? Getting that judge rule. Do you think that is something, institutions can say like, hey, the XRP was, not deemed a security by a judge? Is that something that you were talking about?
Yeah, so the XRP case is interesting because she did rule that the initial issuance of XRP was an unlicensed security, but the sale of XRP on secondary markets was not. And the judge is completely wrong on that. And I think it's being challenged in court. I'm not sure. I got to follow up on that myself. So I think it'll be a while before there is an XRP Bitcoin ETF. So we'll see. But XRP, the company, is trying to actually go live on the stock market because one security is not enough for them. They need two. So we'll see where it goes. I think the SEC is not going to allow an XRP ETF. That one is last down the pipe.
So with the macro environment and everybody predicting that the reverse repo facility is going to be basically out of cash by March, and maybe a Fed pivot coming, do you think the maybe rate cuts will lead and help with this bull run? What is your prediction on what the Fed is going to do?
Okay, so there's multiple questions there. So what I think the Fed is going to do, I think the Fed is going to keep rates above 5%. I don't think the Fed is going to drop rates. We have seen the 10-year yield drop significantly over the last few months. To me, the Fed is not a leader in rate decisions. The Fed is a follower of what the free market has decided with the US 10-year yield. And if the US 10-year yield has dropped quite a bit, they may drop rates. But if the stock market is rising, why are they going to drop rates? Now, and inflation is high, why are they going to drop rates? So in reality, I don't think the Fed funds rate makes all that much of a difference, especially for assets like the S&P 500 or Bitcoin. So my view is always this, right? I think the S&P 500 is going to make more than 10% in 2024. So why do I care what the fixed income rate is? Whether the Fed funds is 1% or 5%, the S&P is going to make me more money. Okay, like I'm not going to get involved in the fixed income market at 1 or at 5. Now, if I think the S&P is going to enter a bear market and the S&P is going to lose money, I'm happy to enter the bond market, and it doesn't matter if it's 1% or 5%, right? Because 1% is still better than a negative number. Bitcoin takes that on steroids, right? Like, who cares about interest rate being 1 to 5% if your outlook for Bitcoin is that we're in a bull market? It's obviously going to make more than 5% between now and January 1st. So the Fed fund rate generally does not make that much of a difference, okay? But now where it does make a difference is in the government bond sector. Now, the government needs to finance the debt because the government cannot live within its means. This is why we run deficits every single year, except a few years under Bill Clinton during the hype of the dot-com bubble. And if it wasn't for the dot-com bubble ramping up, even Bill Clinton would have ran a deficit those years. It was thanks to those tech companies is the only reason why, because a lot of people were paying taxes, right? Like, the companies don't pay taxes, but if you got that fat job, at Google or at Microsoft or at Yahoo, in 1998, you paid the government a shit ton of taxes, right? And that's how the government was able to run a surplus. And we weren't in a lot of wars because it was pre-9/11. So they weren't spending that much money on the military. And people were healthier back then. So lots of reasons why there was finally a surplus. But now this debt needs to get, the government never pays the principal, they only pay the interest. But now they have to reset that interest at a higher rate every single time. And this creates a big problem. And this is why the Federal Reserve and the Treasury, which is Janet Yellen, they are at odds with each other. Janet Yellen wants the Fed to keep the rate as low as possible so that the government is reissuing debt every year, don't go broke sooner. It's like revamping your credit card debt every year, but now you have a higher principal. And now you got to pay interest on all of that, right? So Janet Yellen wants that rate, and the White House wants that rate to be as low as possible. And Powell has his own view of the world, and he doesn't care what the current administration thinks because Powell was, put there by the Republicans. He doesn't like the current administration. I don't know why they kept him on. That was silly of this administration, but that's not the biggest silly things they've done in the last 3 years. We all know that here. So Powell is saying, I'm going to do what's best for the markets. And I don't care what happens to the US federal debt. Not my problem, your problem. So yes, it matters on that scale, but the Fed funds rate is completely irrelevant to any risk on asset. It only matters for like a 48-hour period during the moment of the announcement. And after that, they trade at their own speculative momentum. Completely irrelevant whether the Fed funds rate is 1 or 6.
Okay, what is your prediction or what is your allocation risk to a possible black swan event this year or in the next 5 years, right? We've got the Fed losing over $100 billion per year, okay? We have a year after the Silicon Valley Bank collapse, right? We've got these, we got the commercial real estate market kind of in free fall. You have these indicators of possibly a, recession, depression, possibly in the horizon. What is your risk model for a, some kind of a black swan event this year?
So very low, actually. Black swan event for traditional markets or black swan event for Bitcoin market?
I would just say overall market.
Overall. I'm going to say, any black swan event is going to be a political event. Okay. So for example, the housing crisis was a market black swan event. .com, not exactly a black swan event, but that was a market crisis. The COVID lockdowns, that was a government manufactured shutdown, right? So as far as having a COVID style government created, government manufactured black swan event, I give that a way higher probability than some kind of a naturally forming bubble. And we can also say that the Silicon Valley Bank and the Signature Bank, that was also a government-ish manufactured version because Powell should not have and did not have to raise rates that quickly. That was stupid. And I said it in real time every single time. That one time he raised 75 basis points, I said, this is insane. They always start raising rates too late. And he personally raised it way too fast. and we didn't know what exactly was going to break, but something in the traditional markets was going to break, and it broke those 3 banks. Now, how he could have achieved the same thing. We could have been at the same exact interest rate right now today, and all he had to do was raise it slower. And those banks would have been able to adjust their portfolios with their duration on the bonds that they were holding, their risk-free bonds that ended up causing the collapse of their companies. So that was a quasi free market slash government version. So for that kind of an event, I do see it. But again, I don't want to get too political, especially on your channel. But a lot of it will have to do with the election. We don't know exactly who's going to be running. It looks like Trump crushed it in that Iowa primary and the Iowa caucus. And we don't know what the Democrats are going to do. And this attempt to hold on to power by the Democrats could, take us to war. Could create a situation like in Ukraine where the election was, halted. And if the government decides to halt the election for whatever reason, there could be mass riots in the streets. So going into the election year, I can certainly see a government-induced Black Swan event, but I don't see a free market capitalist Black Swan event like a housing crisis or a dot-com bubble. Those are the big ones I can think of. Some kind of a U.S. currency collapse. I don't see that. So if government actually just let the free market work this year, I mean, sure, the free market also gets into trouble in many occasions. 1987 crash was a free market crash. 1929 was mostly a free market crash. So there are massive free market crashes and black swans that happen. But this time around, I don't see one of those. Only if it's government manufactured.
2024 is going to be a wild year. Maybe the aliens will be the Black Swan event. And so for those that don't know, you can find Tone Vays on Twitter. It's just Tone Vays. And you also run a couple different things. The Financial Summit, correct? That you do. Do you want to talk a little bit about this at all?
Sure. The Financial Summit actually just started doing videos on the YouTube channel as well. The Financial Summit is started off as just an event. It's a once-a-year event. The next one is a little over a year away. It's an event at beautiful beach destinations like this. It's for the higher net worth, for the more professional investor trader, where we get together for a retreat for about 5 days and discuss how to make money in the markets. Basically, it has a huge health and wellness component in the mornings. Usually bring in a boxing trainer, a nutrition PhD. And then in the afternoon, we meet in a conference room and discuss ways to make money. There's a trading contest, so you can make the most money in a few hours. We always have an on-chain metrics component, some more fundamentals. It's not a crypto-only event. We do talk about other markets as well. So I encourage everyone to just Google the Financial Summit, find our YouTube channel, find our social media, and check it out. We're putting out research all the time on Twitter. Very different research than CryptoQuant, so you can definitely have a relationship there.
Yeah, I know. I mean, this was a great discussion. A lot of stuff discussed today. Yeah, I mean, Tone, it's been a pleasure to have you on. You're a legend. For those that don't know, you also run the Unconfiscatable conference in Vegas every year. A lovely conference if you guys haven't been. And you can find him on Twitter at Tone Vays, and as well as the financialsummit.com. So happy to have you on, Tone. We'll for sure have you on again, my brother, and discuss these things. It was great. All right, guys, that's it for Liquid Lunch this week, powered by CryptoQuant. Again, go to CryptoQuant.com, get your free account, and we will see you next time. See ya.